So, let's say you decide it's too difficult to do any inheritance tax planning. For a married couple, all of your assets over £1 million, including those assets abroad if you have lived in the UK for more than 15 years from the last 20, will be taxed at 40%. Now, let's say your children are also reasonably well off and so will also be subject to 40% inheritance tax. Now, this means if they do not spend the money you leave them, that same money will be taxed again before your grandchildren get it. So, how does that work? So, let's say after the first 40% of the original amount you leave your children is taxed, that leaves 60%, right? Now that's bad enough. But then that 60%, when it goes to the grandchildren, is taxed again at 40%. That's an effective tax rate of 64% on your grandchildren. Setting up lifetime trusts means your children have use of the money in the trust by taking interest-free loans, which is eventually recalled on their deaths. As the money was never owned by your children, it was always owned by the trust. They only borrowed the money to, let's say, live mortgage-free. There is no tax on that money a second time round. Sensible planning and more reasons to set up lifetime trusts.